Hello and welcome to another session with me, Bernard Critchley, a tax manager at Aspen Waite, looking at topical tax tips. Today, I want to look at company cars. Last time, I discussed the business expenses that are associated with using your own car. This time, I want to look at the situation where the employee or director is given a car by their employer. At first glance, a company car can be a great perk, but as with most aspects of the taxation world, the devil is in the detail. I could spend the rest of the time today talking about numbers, going through a number of different scenarios. I don't plan to do that. But I would just say that the calculation is based on a percentage of the list price when new, ranging from 2% for electric cars up to 37% for those with emissions that are in excess of 160 grams per kilometre. So, to give you an example, if I was provided by my employer with a brand new BMW 318 diesel, I would have an annual benefit of £12,232. If I was a higher rate taxpayer, that would be the equivalent of a tax charge of roughly £407 a month. However, if instead of that I was provided with a Toyota Yaris hybrid, the annual benefit would be £5,088, which would be an additional tax of £170 a month. There's also a benefit in kind for the provision of fuel for the car that you get, but this is nearly always prohibitive, and it's more beneficial to claim the business mileage. One area of planning that comes from this is when a director's company provides a car for either a spouse or an older child who is not an employee. Obviously, the director would be charged the benefit. So, let's say the company buys a car like the Toyota Yaris hybrid, which we just mentioned, which is used by the family member of the director. His tax bill would increase by £170. which is cheaper than funding the purchase from taxed income or through personal finance. In addition, the company would claim 18% per annum on the capital cost of the car, as well as claiming corporation tax relief on the running costs. If the company leased the vehicle, then you wouldn't get the capital allowances, but the company would be able to recover 50% of the VAT on the lease costs and also receive a corporation tax deduction for the full rental cost, including the 50% of irrecoverable VAT. One question I'm often asked is, when's a car not a car? And the simple answer is, when it's a van. Most of us can identify a van, but the tax legislation is drawn up slightly differently and defines all commercial vehicles, including double cab pickups, as well as certain Land Rovers, as not cars. Why is it important to know whether a vehicle is a van? Because the benefit in kind is fixed at £3,600, irrespective of the list price. Or, another way of looking at it, there's a charge of £120 for a higher rate taxpayer. Finally, let's talk about classic cars. If a company car is over 15 years old and has a market value in excess of £15,000, then that market value is used instead of the original list price when new. This stops you buying a 1965 Aston Martin DB5, which is worth a small fortune, and only paying 37% of the original list price. However, if you feel comfortable driving a small or medium-sized 1970s sports car, whose market value is, say, 14,000, but original cost was 2,500, the tax charge would only be £370 a year. So, in conclusion, company cars can still be beneficial for certain employees, but different cars could have a wide variety of tax charge. So it's always worth having a calculation in mind to see not just the type of car, but the cost to the employee of actually having that car. Buying a family car may be cheaper through the company than for the director and his family funding it from taxed income or through finance. Thirdly, vans aren't always what they seem and can be tax efficient vehicles for certain employees and directors in particular industries. And lastly, there may be some scope at looking at classic cars for those people who are attracted to them. As usual, we are here to give you any and all help that you need, so please feel free to contact us in the usual way. So until the next time, stay safe and goodbye.